Hello. Good morning, everyone. Today's Monday. I hope everyone's Monday is getting off to a great start of the week. First of all, there's been an upgrade in production value here on the Insurance Tips channel. We got a camera gimbal, so now we can come at you hot, we can come at you fast, and you don't have to worry about getting motion sickness when you're trying to learn about insurance. All right, let me go ahead and put this tripod down here. Okay, so today I want to do a video on kind of the core of this entire channel and what it really is about, and that's insurance. And that's what is insurance, and at its core, base level, how does it work? Everybody understands kind of generally what insurance does, insofar as you get in a car accident or someone hits your car or something happens to your house, you pay the insurance company a little bit of money and then they pay the rest and fix it. That's the basics of what insurance does and how it works. But really, at its core, I want to explain how insurance works. It's going to give you a better idea of what you're paying for and a better idea of how insurance markets work. So insurance really is the moving of risk from one party to another. In the case of auto insurance, you could potentially get in a big accident, total your car, total someone else's car, and have a bunch of medical bills you got to pay. That's a certain dollar amount of risk. You take all of that risk off and you put it onto the insurance company. And the insurance company says, hey, you pay me every month a set rate, and then if you have an accident, you pay me a deductible, I'll take care of the rest. So we're leaving you with a little bit of risk under that deductible and that monthly payment, and then we'll take the rest of the risk. That's basically what insurance is. What you're paying for every month, even when you don't have an accident, is knowing that if you do, you have capped how much money you're gonna have to come out of pocket to do any repairs, pay any medical bills, and in the case of homeowners insurance, repair your home. So that's what it is. And it sounds very simple and very obvious, but a lot of people don't understand because they go, I haven't had an accident in 10 years. My insurance company is ripping me off by charging me X amount every month. Well, in reality, that's not the case, because it's really hard to predict if any one driver is going to have an accident. And it's even harder to predict how much that accident's payout is going to be. But an insurance company can look at data of hundreds of thousands of drivers, and then we can get pretty accurate and say, okay, we're pretty sure there's going to be around this many accidents, and there's going to be this big of an average payout, and this is how much it's going to cost each accident. And that's how we set rates. So you're removing that risk, again, from yourself as an individual, not really knowing what's going to happen, and the insurance company can say, hey, we're pretty sure over this big group of people what's going to happen. Now, knowing that, this is why your insurance on your home and your auto is going to have deductibles. Oftentimes people ask, hey, why is this damage not covered or that small thing not covered? I pay for insurance. Well, the reason is, if we took all the risk from a homeowner or a car owner and put it on the insurance company, absolutely everything, insurance rates would be astronomical. Here's an example. All of us can walk outside right now and look at our car and find a paint chip somewhere, a little rock chip, or maybe someone opened their door in ours just a little bit and there's some scuffs. If all of that was covered by insurance without any deductible, people would be getting their cars repainted constantly, and your insurance deductibles would be crazy high. Same with your home. I can go on anyone's roof right now and find some little bits of damage, some damaged siding and things of that nature people could try to claim. So the reason we have deductibles is because think of that deductible as the amount of risk the homeowner or the car owner is keeping. Everything above that deductible is the risk the insurance company is keeping. If we took every single bit of the risk, your insurance premiums would be triple and even quadruple what you pay now, because people would be using it and filing claims constantly. So again, that's what insurance is. It's taking a risk from one party, in this case the owner of a car or home, and putting it on another party, in this case an insurance company. And that's why we have those deductibles. So most importantly is working with a good agent that's going to make sure you have the right level of coverage so that you truly are removing the risk that you think you're removing. And two, that you're setting your deductibles properly. A good agent's gonna ask you questions like, would you rather have a big deductible and lower monthly premium? Again, you're assuming more risk, or pay a little bit more each month, but when you have an accident or a claim, your deductible is much lower, moving more risk to the company. Questions like, how much cash are you comfortable doling out at one time? Do you have an emergency fund for your home that you kind of calculated for a bigger deductible? Those kind of simple questions are going to get you the right coverage and the right policy for each individual, and that's the questions a good agent is going to ask. So I hope that helped clear up some things on what insurance is, how it works, and how the insurance market kind of works. If you have any further questions, please feel free to leave them in the comments below. If you're new to the channel, go ahead and like and subscribe, and talk to you guys soon. Have a great day.